Hey, Mike Swans here. This is a good day for the stock market, but there's something huge going on that no one's talking about. I mean, I know it's nice that the market's up. This is my own account, and you can see just about every position I have is up today. And I got a lot of positions, right? So, I mean, that's pretty friggin' cool. And, the Dow's up 186 points. And cut on the TV, you're going to hear the news that the European Central Bank has just launched a new bond buying program, basically to start bailing out Italy, Spain, Portugal, and even Greece is getting some money. Greece has been getting covertly under the table money from the European Central Bank on just about a weekly basis as they put together another big deal. And that's what I want to talk to you about. Gold's going up. The Dow's going up. Gold's in a new bull market because we've been talking about it now for about a month. Europe's about to follow. But this is big news, what I'm going to show you right here. This is the Greek stock market, okay? It broke out yesterday for a 5% gain in a single day. That's a huge move for a stock market. I mean, individual stocks can move that much, but a market, 5%. Imagine the Dow went up 5%. That'd be something. Well, the Greek stock market went up 5%, and it did that by breaking out of a base, breaking above its 150 and its 200-day moving average. Okay. Well, I own that GREK ETF. I've been talking about Greek stocks or investing in Greece for a while. But here's the thing about this. Think back over the last 2 years. We saw several corrections in the market that happened when bad news came out of Greece. When the bad news about the Greek debt crisis and whether they're going to get bailed out or whether they're going to get kicked out of the euro and all this kind of stuff. And that was the potential dark cloud over the market even now over the next couple months, was this looming question about Greece. Well, here's the thing. Yesterday, the Greek stock market, by going up 5%, by breaking out of this consolidation phase, breaking above these long-term moving averages, in the context of this panic bottom and the valuations and everything, in my book, it's now in a new bull market. The thing why that's important is if Greece is going to collapse and all these bad things are going to happen, the Greek stock market will not break out for a 5% gain yesterday. It'd be breaking down as we speak. It's not doing that. What does that mean? It means you don't really have anything to worry about now when it comes to your own investments in the stock market. We're clearly in a cyclical bull market. It started in 2008. There have been times of panic. There have been times of fear, of pullbacks. And for the past 2 years, they've been associated with the bad news from Greece. Well, it appears that there's probably going to be another bailout for Greece sometime in October, and that's probably why Greece is going up. But regardless, the coast is now clear, all right? And in my view, commodities are going to lead over the next couple of years, and so is Europe. In the Dow, we're going to have corrections, we're going to have pullbacks, and all this stuff. I don't think the Dow is going to do, or the NASDAQ, the S&P 500 is going to do the rest of the world, but I think it's okay. I don't think anyone's going to make big gains there, but the big gains are elsewhere. Look, the Greek stock market went up 5%. That's because it's so undervalued that it almost doesn't matter what happens there. Gold, commodities are going up. The right world stock markets are going up. And the thing is, when you invest or try to trade, which is what everyone's doing in the United States, they're trying to trade the S&P 500 because you get these corrections, you get this trading range, and you're battling against hedge funds, you're battling against trading programs and computer programs, because that's what's dominating the action in the U.S. markets. That's why it's part of the reason we're in these big trading patterns and sideways movements. And it's tough. That's a tough battle to win, against the computer. And it's a lot easier to go and invest and put your money in places where those computers aren't active. And I'm going to show you how to do that. Look at this. GREK is what I own this for disclosure purposes, but I want to show you something. This is an ETF that invests in Greece. It was up 5% yesterday, just up a little bit today. But here's what I want to point out to you. It only has net assets of $6 million. In other words, through this ETF, there's only $6 million of money being invested in Greece. Greece is like the size of the economy. It's like it's like number 20 or so in all the world. It's not a tiny little country. You know, in size, it's tiny compared to the United States, but it's actually got a fairly big economy. And despite that, only $6 million is being invested in the GREK ETF. Only $6 million from, say, the United States or elsewhere is going into Greece. Most mutual funds and institutional investors have fled Greece. They've fled of all of Europe. And there isn't much computer programs are not buying GREK because they don't think the liquidity is there. They need liquidity. They need to trade spiders and futures and all this kind of stuff, and they can't get it in GREK. So it's being ignored by Wall Street. It's being ignored by the hedge funds, and that's where the real opportunities come for a small investor like you or like me, is to find places where Wall Street's fled, where Wall Street, the big banks, the mutual funds, the hedge funds, they're not there. And we can slip in there where things are at super low valuations. We sneak in, we get position in a year, 2 or 3, or even 4. Then Wall Street wakes up, well, all this stuff's already gone up. Then they start investing. Because what happens is mutual fund managers want to look smart, and they want to have on their books at the end of every year, end of every quarter, the top performing stuff. They don't want to have bad stuff on their books because their investors get the statements, they look at it. So like the typical investor right now is scared to death of investing in Greece and Europe. Despite the fact they're entering new bull markets, they're terrified. And the mutual fund guy, the hedge fund guy, the institutional guy that's handling the money of the masses doesn't want to have these investments on their books because they think, well, grandma's going to get the statement or Uncle Billy, and they're going to see that we've invested in Greece, and they're going to call their investment advisor and say, this fund's crazy, get me out of it. That's the opportunity for us to step in, and that's why big money can be made by thinking outside of the box and going where valuations are so cheap. The cyclically adjusted PE ratio of Greece is under 4. Okay, that's the level that the U.S. stock market was at during the Great Depression. Other super undervalued markets include Russia, they include Italy, they include Spain, they include Portugal, they include Austria, they include Belgium, and I've invested in several of these countries through exchange-traded funds, as you know, and you can see by looking at my portfolio holdings. But I just want to point out to you today 2 things. All right, good news. Greece is breaking out to a new bull market. You no longer have to worry. I don't care what you're invested in. That's a storyline that's gone. You don't have to worry about that anymore. And I know it's something that's been in the back mind of people's heads, right? So forget about it. Be happy now when it comes to the stock market. And don't worry, all right? Second point, opportunities are all over the world. Think outside the box. Get away from trading in places where Wall Street's all focused on, the hedge fund robots are operating. Get out of that. Don't worry about those markets. Go to where valuations are cheap, where bull markets are beginning. Look, Greece has the potential to go up 300 to 400% over the next couple years. The S&P 500's got the potential to go up to its highs, of 2007, or maybe even a little bit higher than that. But at this point, whoop-de-doo, you're about taking the same amount of risk as a potential gain there. It's not really that great. I'm not saying get out of it. I'm just saying if you want to put more money to work, if you want to invest where things can really charge up, this is how to do it. and this is crazy, all right, because $6 million in an exchange-traded fund invested in a large economy. If you buy a penny stock, a stupid penny stock, it probably doesn't. A lot of penny stocks have market caps of 20 million and 30 million. They got that much money that's flowed into them. So GREK, the exchange-traded fund, is a valuation smaller than a typical penny stock. You know, that's incredible. I mean, to me, I'm trying to, you know, it's just amazing. So anyway, good news today. More good news is to come. This is an exciting time to be an investor in the financial markets. You know, it may not, it's fun in the Dow in the U.S. You know, it's nice to see the Dow go up 200 points today about or right now. I don't know what it's going to do on the close. It'll be down on the close. I don't really care. It's up 1%, basically. You know, I think it's fine. You know, you want to be diversified. But it's just fun, man, to be going into Europe, to be going into commodities, to be going into mining stocks. Let's see, what are mining stocks doing today? Just out of curiosity, the GDX ETF is up 1.38%. You know, it gapped up nice and went down. It seems to be going back up. What anything does in any given day normally doesn't matter. You know, it really doesn't. It's what happens over the months, what happens over the years. But occasionally a day comes. A day does come where something significant happens, and that day has come yesterday for Greece. When a market breaks at 5% after basing and making what's most likely, by all appearances is a bear market bottom, then it bounces up, bases, and then breaks out again above its long-term moving averages. That's significant. That's a significant day, and that's what we saw. And it's good. It's good news. It doesn't matter if you own this or not. It's good news if you're invested in the financial markets. So I want to leave you that, and I'll talk to you later.